Hello and welcome to the Future of Real Estate. I'm Brett Ellis at the Ellis Team at Keller Williams down here in sunny Southwest Florida. And today we're going to do a little bit longer video. We're going to talk about the national numbers, where real estate's been, where it may be going, and the things that affect real estate. Next week we'll probably come back and do some more local, but I thought this would be fascinating to go through. We've got some excellent research for you. So the first thing we want to go to is home sales on an annual basis. Now, if you look at this number here, in 2024, we did just under 4.1 million sales. That's about a 30-year low. That's happened a couple times back in 08, and then going back to about 1995, 96. So home sales, the total number of home sales, about a 30-year low. And we're projecting for 25, about 4.2 million sales. So kind of the market we're in is the market we're in. It's not going to move a heck of a lot. The next thing we want to talk about are home prices annually. So these are the historical average or median price for homes across nationwide. And one thing you'll notice about this blue line here, that's the trend. Home prices on average trend about 4% a year up. There's some years where it's higher, some years where it's lower. And prices can actually go down a little bit, but over time, that 4% is a good trend line. Now look what's going on here. In the last few years, we're above the trend line. In fact, in 2024, we were 9.9% above trend line. If we go back in time to about this time period, 2002 through 2007, even 2008, we were above trend line or at trend line. But what happens when you go above trend line for too much for too long? Back then we were 21% above trend line, and then you saw a fall in prices, and it took a period of time. Now, we're not as exaggerated or severe as back that happened in about 06. We're only not 10% versus 21%, so we're half of that. But we could have a protracted period where home prices need to take a breath. They need to take a breather, because we can't stay above trend line for too much for too long. Now, another point I want to bring up. Back then we had sellers say, well, I'll just wait a year until home prices go back up. Well, if you did that, you would have been waiting about, let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 years to get back to that trend line. And certainly you would have waited probably about 10 years, not 8 or 9 years to get back to where you were here. So just, something to kind of keep in mind. If you're thinking about waiting to get the price that you want, it may be a while before you get the price that you want. Sometimes, and we don't know where we are because we haven't really started our descent nationwide. Now, you got two options of what could happen. We could just quit appreciating and let the 4% line catch us, or it could fall like it did back in 08 or 09 kind of thing. We don't know what the future is going to bring. But I just wanted to point out that scenario to you. The next thing I want to look at, I'm going to skip some of these slides, is the this total market volume. This, if you take the total number of sales divide or times the average price, you're going to get the total dollar volume of sales. I won't spend a lot of time on that, just to keep things simple for you. Let's look at nationwide housing inventory. Nationwide housing inventory is actually pretty low, and there's a reason for that, which we're going to share for you a little bit. But the trend line is a balanced inventory of about 6 months. Nationwide, we're about 3.7 months. So we would call that a buyer's market. A seller's market right now, because we're well below that trend line. But when we got into 07 through 2013, that was a buyer's market when we start getting above that trend line, and we had the same thing back in the 80s. But that's where we are right now nationwide. Now, Southwest Florida is another story. That's why we're going to do a whole different video of what's going on. But I want you to see what the numbers are and what's driving these numbers. Let's look at mortgage rates. Historical mortgage rates have averaged about 7.72% going back to 1972. Now, if you want to go back to more recent time, from 1990 on, 6%. Well, where are rates at today? they're around 6.5 to 6.75. So we are between those two numbers. And in 2024, they averaged 6.72%. The projection in 2025 is they're going to come down just ever so slightly, down to about 6.5%. So again, the market we're in is kind of the market we're in for interest rates. We don't see a big change coming up in 25, maybe even to 26. One thing we do know is this. We tell people, don't worry about what the change in interest rates. Look more at the direction. When we see interest rates come down just a little bit, buyer activity picks up. When we see you go up just a little bit, no matter how little, buyer activity slows down. It could be an eighth to a quarter of a point, and it could really affect the market. So we look at direction as much or more than we do the actual percentages. Okay. The next thing I want to talk about, well, I'll show you the monthly interest rate. Look at December of 2020, rates were below 3%, but man, they shot up fast. It didn't take long. And that's kind of the headwinds our market's been in here, both nationally and locally. 74% of homeowners have a rate of 5% or less, but that's going down every month because people's lives move on. They have to buy, they have to sell, they have to move, relocate. People get divorced, babies get born, people die. All kind of things happen, life happens. So as they do that, you're going to see this number just keep going down every month, every year. This is the big one, the affordability. So back in 1981, homes weren't affordable. 49% affordability rating. And of course, that was tough times back in the early 80s. I didn't get into real estate until 1988, so I've been doing this about 37 years. But we were on the downside of that, thank goodness. But times were tough back then. Then we got into 2005 and home affordability. That's ability to afford the home, your payment, insurance, taxes, all that kind of stuff. It hit 32%. And then it went down because it was just not affordable. Look at where we are in 2024. We're at 32%. Kind of a worrying number, a little bit. The average, historical average, is 27%. So we're about 5% over. And remember when we said home prices are about 9.9% over that trend line? Well, now you got two data points saying this market, national market, might be a little bit overpriced. And then if you look at, say, year 2000 on, that trend line is about 20%. So we're way overpriced for that. But there is one more key set of data that I'm going to talk to you about that's influencing these numbers, and it explains why they are what they are. Okay, now I want to turn our attention to the U.S. economy because that drives the real estate market as well. So right now we're paying attention to the national economy, and these are the GDP numbers, gross domestic product. You see, last year in 24 we were at 2.8, so that's not bad. Obviously, we fell down in 2020 because we shut the whole economy down due to COVID and whatnot. We got red hot in 21 at 5.8, and that's not necessarily a good thing. So things had to simmer down, and then the Fed got involved and raised rates and kind of slowed GDP down that way as well. The next slide I want to get into is the unemployment rate. So right now in 24 we were hitting 4%. 4%. And that was kind of the Fed's target. They didn't want to go too much over 4%. So they've got a tricky balancing act to lower inflation, raise unemployment purposely, but not go too far with it like we did back in 2010. We don't really want to see 9.6% unemployment. That's not good. Or 8.1 back during the COVID. Now, that was artificial because we shut the economy down on purpose. Everyone had to stay home and whatnot. So, but we're at 4. If we could get back down, 3.5, that would be great. But the bigger thing is we got to get inflation under control. Let's see, personal savings rate. This one's a little bit concerning. The historical average is about 8.3%. If you go back just from the year 2000, it's at 5.2. But in 2024, we're down to 3.8%. So Americans are not saving. They're spending more of their money. And I think inflation's been a big factor of that. Not just housing, but cars, gas, insurance, food prices, just everything just skyrocketed in 2021. And it's just really cut into people's disposable income and what they could spend. So it's quite natural that they've spent down their savings. So Americans really aren't in a good space. And if you're expecting Americans to spend their way into consumption and help bring the economy up, that might not be the place to look right now. Let's see. I'm not going to spend a lot on the inflation. We got a lot of risks that we can talk about. I'm not going to spend a lot of time in this video talking about all the risks. I mean, we've got wars. We're trying to end the war in Ukraine. We've got Iran. We've got Hamas. We've got the Gaza Strip. We've got the Israel thing. You've got and flare-ups all around the world. Needless to say, there are wild cards out there that can affect the economy, which can then affect the real estate market. But I think what we're going to do is next week, we're going to do a longer video and talk about, now that you've seen what's going on nationally, let's talk about where we are locally, because our market's different. Like, there might be some shining spots here in Southwest Florida because we started this correction process before America did. And maybe, just maybe, we'll come out of it before they do as well. So that's what's going on. When you read these headlines that there's no inventory, home prices still going up, that's not here. That's in the rest of the country, but that might be changing there, and then we'll focus on what's going on here. You've been watching The Future of Real Estate, presented by the Ellis Team at Keller Williams down here in sunny Southwest Florida. You can reach us, so Sandy and myself, at 239-310-6500 if you don't want to wait for next week's video and you've got property to sell, or if you're looking to buy. You can read our blog. We share a lot of this information at blog.topagent.com. A couple other websites, topagent.com, or if you want to search the MLS, leecountyonline.com. That's leecountyonline.com. And then swflhomevalues.com. That's a great place to get an instant value of your home, and it will update you every month so you can watch the direction of home values. As more important than the rate is what direction are they going. So thanks for tuning in, and we will see you on the next one.
If you're selling or you're buying or moving right away, the Ellis Team can help.